Hello everyone, welcome to this webinar today, Getting Ready for 2020, Running a Better Business. I'm Peter Towers, Managing Director of ESS Small Business and ESS BIZTOOLS. Welcome to an audience that I understand includes accountants and small business operators and medium-sized business operators. I hope that we're able to give you some very interesting information today. So what type of business do you envisage operating in 2020? If you're the owner of the business. Or what type of business do you envisage working in during 2020? Does your business have a vision? If you're one of the directors or owners of the business, do you know where you want to go in the next 3 to 5 years? If you're a team member, are you confident that your leaders in the leadership team and the directors, if you are a company, have developed a vision for where your business is headed? And what do you visualize that the turnover in your business is going to be during 2020? Are your facilities adequate? Is your workshop, storeroom, inventory area, office, is it suitable for your future plans? Or do you need to make some changes as to what you have in your business? Will your customers continue to support you during 2020 and future years? Or do you think some of them might leave because your company's not keeping up with technology, or there's a new competitor coming to town? Do you have a value-adding team? This is very important when we start looking at this whole start of a new generation, 2020. Who's in your team? Who are the people? Are they motivated? Are they trained? Are they encouraged to think? Are they being developed to succeed people in the organization? So there's an internal succession plan working. Who are the leaders? Have the leadership team members been adequately trained in a range of activities? How Fair Work Australia operates, workplace health and safety issues, production control, reading the financial accounts that are applicable to the segment of the business that they lead, understanding the key performance indicators, making their reports to the management meetings that are ultimately passed through to the board of directors meetings. Does your organization have company directors? Do they have formal meetings? Or is there a board of advice? Are they aware of what's happening in the business? Do they need more training? Have they undertaken the Institute of Company Directors Diploma course? Who are the professional advisors? Your accountant, solicitor, marketing consultant. And is there more work you can get them to do for you? Remember, in big organizations, a lot of those positions that I just mentioned are full-time positions. Most small businesses and medium-sized enterprises cannot afford for those people to be working full-time. But could you get them to be doing more work on a virtual, outsourced type basis to ensure that your company is up to date? And one of the key roles in developing a business, helping a business grow, is having a chief financial officer. Now, again, most businesses will not be able to afford a full-time CFO, but have you considered entering into an arrangement with your accountant or an accountancy firm to supply you with a chief financial officer on a virtual or part-time basis, outsource basis? It's happening all over Australia. Who looks after marketing in your organization? Social media, website, news releases, your internal communications. Who's in charge of selling? A very experienced company director from America addressed a seminar that I was at in Melbourne a few years ago, and she indicated that the most important person in the organization was not the CEO, was not the product development person, the IT whiz, but it was the salesperson, because it is the salesperson that generates the revenue. Her comments were that companies cannot live forever on shareholder funds. You need to have someone out in the marketplace making the sales. Who is your salesperson? Are they adequately trained? Do they understand the products? And are they working hard to achieve the income? Does your organization undertake research and development? It mightn't be research and development done in a formal sense. It mightn't even be for the purposes of trying to obtain a tax rebate from that expenditure. But every business needs there to be ongoing research as to what is happening in the marketplace. What are competitors doing? What are businesses completely off the chart at this stage as far as being called a competitor? What are they doing? Because they might come in and completely disrupt your market. Look at what happens to taxi services around Australia. Are all the components of the business in place? With people? With the leadership team? Do you need to make changes? Do you think that your business has a differentiated strategy? Because one of the key aspects of survival for businesses, especially small businesses and medium-sized enterprises, professional accounting firms are no different, is that the business needs to be able to clearly identify its points of difference. Otherwise, why would customers come to your firm? What do you do better? Where is your presentation better? It might be that you got the cleanest and brightest trucks in your fleet in your city, as Arnott's used to have in Sydney years ago. As a youngster, I remember their bright red trucks. They were known for that. It was part of their differentiation strategy. You assumed if someone had bright red, very clean trucks, that their product had to be good. I think the same assumption would apply today. So how is your business different? And can your strategy be implemented? We can all sit down in boardrooms for hours or days on days and develop strategies. But the challenge is, how are they implemented? Or how are they executed, as one of the writers calls this subject, executing the strategies. How do you go about doing it? Do the team understand it? Do you need a coach or mentor to assist you with any of these processes? Big companies have coaches and mentors, but a lot of small businesses and medium-sized enterprises don't do it. Why not? You can employ people on an hourly, part-time, as needed basis to implement particular projects for you. In small business and medium-sized enterprises, you might not have those experts on hand in your organization 52 weeks of the year. You can hire them. And do you have a strategy to have cash to weather the storms? Because businesses that are growing need cash. And changes can occur. You can have a major customer who's been paying you on a 50-day payment basis suddenly has a problem and the payments blow out to 110 days. What does that do to your cash flow? So let's go through a few of these main headings, these main components of running a successful business. The key areas that you are going to have to nail to be running a very successful business in 2020. And as we have accountants viewing this webinar today also, I would urge the business directors and operators that are watching to think about how you might be able to utilize your accounting firm's resources more. They can do a lot more than prepare annual accounts and income tax returns. And their market is changing. Most of them have the spare resources that they could undertake more work for you. There just needs to be a conversation. So let's look at people, your team. Have policies been developed for hiring, induction? Induction is one of the big problem areas, I think, in Australian business. You go to all the trouble of interviewing 20 people that applied for a job. Sometimes you get 2 or 3 of them back for a second interview or even a third interview. And then the whole thing gets let down because the induction process is not handled properly. The person that was supposed to undertake it decided they had a more important task to go and attend to. And it doesn't get appropriately delegated to someone else to do. So the new person turns up bright, ready to go, enthusiastic, but there's no welcome put on for them. It's cost a lot of money to employ that person. And you can lose them in that first few days unless the induction process is working right. So if you haven't already got a strategy for inductions, please prepare one or get a consultant in, and I can recommend one of our associates who undertakes human resource type activities. Who could do that for you. One of the new terminologies that's starting to be utilized around the world for human resources is in fact talent development. And I think it really nails it, doesn't it? Isn't that what you should be doing with all of your people? Developing their talent so that their skills, their talents can be used on an ongoing basis within your business. Have you got a plan for that? Let's move on to the leadership team. Leadership teams have got to be able to work in conjunction with the board of directors or the board of advice or the owner of the business. They just can't go off and do things on their own. The board should have, or the owner should have, established the policies. But it's then up to the leadership team to implement those policies. So they've got to have an understanding of what the board or owner has decided. But then those leaders need to be able to communicate with their team member, the people in their team who work for them. They have to be able to clearly communicate what is required. And in 2020, they need to understand financial reports. They need to be able to read them and understand the key performance indicators that apply to the segment of the business that they're in charge of. I had a webinar like this yesterday for accountants, and I urged accountants to make sure that the management accounts that are being prepared, the financial accounts for management, are prepared on a segregated basis so that the guy running the paint workshop in a factory can receive his profit and loss account and key performance indicators. He's really not worried what happens with anyone else. That's the general manager's role, to look at the activities of all of the components of a business. But your financials need to be dissected into the individual departments or businesses that they relate to, so that the leader of that particular group of people is able to receive a report that they understand and the KPIs. And if they don't understand them, please get them trained. Your accountant could undertake a training program with them to train them how to utilize these services. And let's look at the operations of the business. Very important. What's going on? This is part of your differentiated strategy. Who plans? Who sits down and visualizes what's going to happen? Who's worked out what's going to happen next week or the week after or 3 months' time in your business? Someone needs to be doing it, but there then needs to be coordination. What's happening in production? Is production working in conjunction with marketing and getting feedback from sales as to what is likely to happen? Or are they just going ahead churning out the same number of widgets week in, week out? So production planning is very important. Are the warehousing operations working efficiently? Or are you building up inventory and therefore you're likely to run out of warehousing capacity and have to go off and spend money to acquire additional storage facilities to be able to warehouse your products? What's the problem? Is it because sales are not occurring? Or are you deliberately stockpiling to meet a particular event? It might be Christmas. But if that's the case, surely in the planning, someone had nominated that your warehousing facilities were not going to be large enough, and you would need to secure some extra facilities. How are your products or services distributed? What's the plan? Excuse me. Do you review your charge out rates if you're a professional firm or a trade or wholesale type organization? How do you charge? Or is it just trying to guess what your competitors are doing? Or is it last year's figure plus 3%? There is a process that can be worked through to get charge out rates that will line up with what your projected profitability is, what your team members' productivity is. All that comes into play. And in a retail environment, has there been some checking on your anticipated sales mix and the markups of various types of products to see whether those prices and that sales mix will generate the profit that you would like to achieve in your business? In other words, what's in the budget? Unfortunately, people tend to put figures into budgets without then working through how are we going to price these products to make sure that's what we get. Because in a retail environment, you don't all have one markup. They vary, don't they? And therefore, the quantity of the product that you're likely to sell needs to be taken into account. So someone needs to do some planning. Prepare some spreadsheets. Make some calculated guesses as to what the sales of the various product components might be. But then the actual trading figures need to be monitored, because if you've budgeted that 40% of your sales are going to come from a product that you can mark up 200%, and then you find that in actual practice, that product line is only selling 22%, you're not going to generate anywhere near the profit you thought you were going to do. So it then needs a recalculation, a recalibration, if you like. What can we do? Can we move some of our other product prices up a bit? Because we've dropped 18% of the sales on our premier item, the 200% markup item. So that's what can be done by getting your accountant to work with you, your chief financial officer, on the charge out rates. Marketing. Marketing's a very important role. When I started as an accountant in an accounting firm many years ago, marketing wasn't even thought of. Today, it's important to accountants and lawyers. I've noticed a law firm in my city that's been around for over 120 years is advertising for a marketing officer in last Saturday's newspaper. I was surprised they used the newspaper to do their advertising, but they were looking for a marketing person. Because these days, marketing covers social media, covers websites, it covers newsletters and communication with customers and prospects and putting out news releases to the local media. Sales. I've mentioned sales before, the importance of having a very competent sales person driving that area. What's going on with the development of intellectual property? Are you undertaking research and development? Is it being appropriately documented so that you could claim, if you're a company, the research and development rebate? And how do you protect intellectual property in your business? Is that a strategy that should be closely looked at as we go into 2020? Because intellectual property is worth money to a business. And some companies have really realized how valuable it is to their company, to their balance sheet. They put it on their balance sheet. Is it being documented? Is it been recorded? Is it been locked away in case someone got hit by a bus? Too much intellectual property is in people's heads. Should be written down, should be safeguarded, and decisions should be made as to whether it could be patented. And are you looking at expanding the business in 2020? And if so, who's in charge of the expansion plan? Who's looking for a new site? Who's thinking about putting the team together, acquiring the plant and equipment, or fixtures and fittings, or whatever, the computers that are going to be needed? So who's doing that sort of thinking? And what are you going to do about developing your talent? Are you going to put in some training programs so that everyone is brought along on this journey? Because the more you can get people to improve their skills and knowledge, the greater chance you've got of really being able to scale up your business, to grow it responsibly, to grow it with an enthusiastic team who don't feel like they've been left behind. What risk management strategies have you got in your business? Are you protecting your assets? And by that I mean, if appropriate, are you registering your customers or the assets that are held by other people for whatever reason on the Personal Property Securities Register? Because businesses have gone broke around Australia, and over $440 million has been lost by businesses in Australia. One of them lost $62 million, and they were in the top 100 businesses in the world because they failed to register transactions on the Personal Property Securities Register. Now, it's not the easiest legislation to understand, and I'm not here to defend it because I don't particularly like it, but it is the law. And you need to be aware of it as part of your risk management strategy. But risk management covers a whole range of other issues. Covers your key people. Budgets and cash flow forecasts and projected balance sheets, which is a way of proving that the budgets and cash flow forecasts have been properly prepared. Who's in charge of preparing them in your business? And are you receiving departmental financial accounts? I mentioned that a little bit earlier. And one of the big issues, are you encouraging your accountant to help you run a better business? Why don't you say to your accountant, you want to sit down and have a quarterly meeting with them? And it doesn't matter if it lasts 3 or 4 hours, because you want a full review of all aspects of your business, all of the issues we've just discussed. And you may have, of course, members of your leadership team there with your accountant, acting as a chief financial officer, to go through the business, not to talk about tax. They can probably already have a meeting with you once a year to talk about tax. But if you're inclined that way, which a business was that wrote an article in the Accountants Daily, which is a website that's run for accountants, back in April, this particular gentleman wrote a letter and said, "This is an open letter to my accountant. I want you to help me run a better business. Tax doesn't light me up. It doesn't really interest me. I will pay what you tell me to pay to the Australian Taxation Office. But I would like you to talk to me about how my business compares to my peers, benchmarking. I would like you to talk to me about my debtors, because someone's just told me that our debtors days outstanding is 83 days. Is that okay? Or should we be trying to reduce the amount of money we're owed by debtors? Are we achieving a reasonable stock turn? Are my employees productive enough when it's compared to my peers in this industry? There's a whole range of matters that could be discussed at these businesses to help you, the business operator, run a better business. Your accountant should prepare minutes of these meetings and should prepare an action plan which goes to every person that received a Guernsey, something to do. They're in the team. I think we've discussed the strategies. Let's look at how you might implement them. By whom? Who's responsible for each of those items? And you just can't say they're all going to be done by the boss, because we all know that won't happen. The CEO, the owner, managing director, whichever title you want to give the owner, is going to be busy doing other things. So by when? When are the various deadlines that are going to be put in place in the planning process on these strategies? And what's the measurement of performance? This needs to be agreed beforehand if you're going to be running an outstanding business. And obviously there will be some mistakes, but you need to learn from them. And let's look at cash to weather the storms. Businesses should be sitting down and thinking about where you're going to be in the next 3 to 5 years. I'll just give you a little while to think about that from your point of view. If your business was going to continue to operate in the marketplace, what amount of cash are you likely to need for new projects in the next 3 to 5 years? I think you should be involving your accountant in this very important process. This is what accountants are trained for. They can be a lot more valuable to your business than just the tax return side of things. So involve your accountant. Think about them as being a chief financial officer, because what a chief financial officer does in a company is looks at a whole range of commercial and business matters. Tax is just a small part of it. I know, because I was one in a listed public company some years ago. I was also the company secretary. So I was in a very pivotal position to look at everything to do with the business, accounting, and financial matters. So your accountant can perform that role for you. Are you going to be able to get the money you need from banks? Banks are in a bit of a quandary at present, aren't they? The aftermath of the Banking Royal Commission. I understand it's very difficult to get new facilities from banks unless you clearly fit into a predetermined set of guidelines. So is your bank going to be able to give you the financial support you need? If you're dealing with finance companies, are they going to be able to give you that support you need? Cash can come from some other areas like debtors management. If your debtors are sitting, the figure I said before, I think was 82 days, and you've got a turnover of $3 million, if you could reduce debtors days outstanding back to 60 days, you would be contributing a significant amount of money into your cash reserves in your organization. So is part of the cash going to come from reducing debtors days outstanding? That can be difficult. The same thing with inventory management. Can you really analyze your stock turn, compare it to your peers through benchmarking comparisons, and perhaps decide that you can realistically improve the stock turn to save some cash. Or you could talk to your bank or one of the specialist debtors factoring companies about obtaining debtors financing, getting prepaid on invoices within 24 hours of you raising that invoice, getting advances of about 85%. The same with special inventory financing, whereby a banker or a financier will supply the funds for you to buy stock or parts that are needed within the business. And maybe it's you want to do some more leasing and hire purchase. What happens in businesses as they grow, as they scale up, is that as turnovers increase, normally what happens is the business ends up with more working capital type items. Inventory, debtors tend to increase. Work in progress, if you're a trade organisation or a professional organisation, that can also increase because your volume of work is increasing. Now, in some instances, so will your creditors increase, but you're not always in control of your creditors, are you? Your suppliers are insisting on payment on 30 days, and if you don't pay, you don't get supply. Or they may even be imposing shorter payment terms. Or you might find that in your cost of sales, a significant cost is basically cash payments, things you've got to pay cash for, wages, and depending on your size now, very prompt payments of the PAYG tax deductions that you've made from employees and the payment of superannuation cannot go through creditors. It's got to be paid in cash, in effect. So have a good look and think about it. If your sales are going to go up by $2 million over the next 2 years, how much more money you're going to have to invest into the working capital components. Government grants. Government grants are a great way to get an influx of money for a particular project. You might be able to get an ongoing government grant, of course. If you're an exporter, you can claim the Export Market Development Grant. It does peter out after some years in the same market, but can be very helpful. You might be undertaking research and development activities and be fairly confident about receiving an R&D rebate of that expenditure. That can help. And there might be some other activities you've undertaken that you could get a grant, like an accelerating commercialization grant, which is up to $1 million on a 50-50 basis. Perhaps you can negotiate some external loans with shareholders or directors or friends or other people who for some reason are prepared to lend you money. They might be suppliers who are keen to help your business expand and will lend you money. But what about capital raising from the public? Someone said to me the other day, oh, we can't do that. We're a private company. Well, you can, and you've been able to do it for 18 months for crowdsource funding, equity raising, nearly 2.5 years for early stage innovation companies, which is only for startups, companies under 3 years of age, admittedly. But you can, and you've always been able, if you're a company, to raise money under Section 708 of the Corporations Act. So capital raising for private companies, and you have to be a private company, please discuss with your accountant. Section 708 of the Corporations Act's been there for 35 years. It was difficult prior to that legislation amendment being made. But a company can raise up to $2 million in a 12-month period from a maximum of 20 investors. One thing you need to monitor, though, is just how many shareholders you had, because there is a maximum of 50 shareholders in a private company for the capital being raised as Section 708. Then we've got crowdsource funding equity raising, which started in January 2018 and is slowly taking off in Australia. Companies could raise up to $5 million in a 12-month period, and if the market's prepared to support them, go back to the market again next year. There is a turnover limit for the company, under $25 million annual turnover on a group basis, gross assets to be worth less than $25 million, and the company cannot be listed on a stock exchange anywhere in the world. And that's probably a fair number of the people who are watching our webinar today fit into that category. Then you've got to want to do something. You want to expand your business. You want to develop a new technology or whatever. And someone needs a fire burning in their belly to be able to convince investors as to why they should invest in your business. And we've got a new one. So this is a great time for people running small and medium-sized businesses, because the government's announced, the Federal Treasurer, Josh Frydenberg, announced about 10 days ago that he expects the new Australian Business Growth Fund to be up and operational very shortly. In fact, I think the word he used was imminently. So this is a fund that the government has established, that the government's contributing 100 million, and the government has had some negotiations with banks, and $420 million in capital is being contributed by the banks. I think that's wonderful. So this fund's going to have its own board and own management team. And according to the Federal Treasurer, we'll be looking to invest patient capital, were the words he used, into 30 to 50 companies each year. And those companies will have turnovers from a minimum of $2 million to a maximum of $50 million in a year. So that new fund should be underway in the first quarter of 2020. Now would be a good time to start thinking about it and getting ready for it. It's very appropriate that we're talking about this on Black Friday, because we've got a special a little bit later, which will help you gain a greater knowledge of these matters, and will also help your accountants that are watching. I think you should be contracting your accountant, if you're a business person, to be your chief financial officer. If you want to take advantage of crowdsource funding, equity raising, the Australian Business Growth Fund, and other opportunities to grow your business, I think there needs to be a greater appreciation that small businesses and medium-sized enterprises need an experienced accounting input beyond just the annual accounts and the tax return. There's been a report published in the Financial Review a couple of days ago, which attributes a number of comments to the CEO of Xero, Steve Vamos. Steve said that small businesses, medium-sized enterprises need a coach. Now, you might need more than one coach, to be honest, but one of the coaches could be your accountant as the CFO. He said that big businesses commonly employ strategic advisors or coaches, but most small businesses miss out. You can employ these people. They will work for a few hours a week or a month because they've got other clients they're also working with. That's what I do in my consultancy business. Challenge your accountant to use his or her forensic knowledge of your business to spot issues that you might be too busy to see, said Mr. Vamos. Does that ring a bell? Does that make you think, gee, perhaps that's how I should be using the accountant? Your accountant should be analysing data and providing strategic advice and coaching and mentoring. And then Mr. Vamos went on to say, people who don't change are going to be more at risk from change than those who embrace it. It's worth repeating. People who don't change are going to be more at risk from change than those who embrace it. So is your accountant supplying these types of services? Sitting down and saying to you, I'm going to help you run a better business? Or is your accountant really only interested in doing annual accounts and tax returns? And there is a role for that, of course, but many businesses need a coach, a CFO type person who can perform more work. So if you're interested in obtaining some names of other people who could undertake the CFO role for your business, send me an email at the end of this webinar, peter@essbiztools.com.au, and I will send you details of some of our accounting firm subscribers all over Australia who are committed to supplying these types of services. Not to take over your tax work, your current accountant can continue to look after that. So how can ESS Small Business assist you to run a better business? We produce articles, templates, product packages, which we place onto a website, www.esssmallbusiness.com.au. Some are free, just click onto them and download them. And some are for sale, which you'll have to put your credit card into the system and pay us for. But they're all there. We produce regular free webinars, like we're doing today, to keep you abreast of developments. And we can introduce you to accountants who can deliver the Chief Financial Officer service on any sort of basis that you want. We also want to talk today, though, to the accountants. So please forgive us, the business operators. I want to talk to the accountants who are viewing this today. We have a range of products on ESS BIZTOOLS, which is www.essbiztools.com.au. There's 23 product packages. There's hundreds of articles, templates, videos, a government grant identification program, and all of the material which will assist you to deliver value-adding Chief Financial Officer business advisory services to your clients to help you add value to your clients' businesses. So we think we've done all the hard work, we've produced it, and then we've marketed it to accountants all over Australia, and everyone pays us, and we supply it all via the internet over our websites. And that's where everything's available. And you go on there and look at the learn mores on our individual product packages, the 23 of them. Crowdsource funding, personal property securities register, early stage innovation company, chief financial officer services, business plans, debtors management, succession planning, setting retail pricing, setting charge out rates. There's some of the product packages that are included. And we're committed to continuing to produce product packages. We'll be releasing a product package on the Australian Business Growth Fund to assist accountants to be able to give advice on this new avenue for companies to raise capital within about a week of the government finalising their announcements. We'll produce videos, some material that you could place onto your websites, articles that you can send to your clients, that you can badge as yours if you're subscribing to our products and services. We also produce regular webinars alerting accountants to developments. We have normally 2 of those a month. We've got 3 in December. We've got a few things we want to talk about. And you can subscribe for the total product package, which currently is, including GST, 2970, including GST for our gold package, or you can subscribe on an individual product basis. That's your decision. But the big news is it's Black Friday. And we have a 33 1/3% discount for new subscriptions from today, from now, to Monday the 2nd, which is Cyber Monday. And then we can continuing the promotion for the remainder of the week, but the emphasis has dropped down a little bit. It's then a 25% discount from Tuesday the 3rd of December through to Friday the 6th of December. So please visit our websites, and there they are on the screen. ESSsmallbusiness.com.au for business operators, ESSbizgrants.com.au for accountants and business advisors, and ESSbizgrants.com.au primarily for accountants and business advisors, but SMEs, if you want to have a look, you can. You can put your details into the system. We don't keep them, we don't get them as such. So you can have a look how the system works, because it will assist in the identification of grants that might apply for a particular business. Excuse me. So if you've got any questions, you need more information, please send me an email, peter@essbiztools.com.au, or telephone me on 1-800-232-088. So thank you for joining us today on this Black Friday presentation. I hope I've given you a reasonable overview of the products and services that ESS BizTools provide that will help you get ready for 2020 to be able to run a better business. And for the accountants who have joined us on this webinar, I hope that that will help you to be able to deliver enhanced value-adding services for your clients. So thank you very much, everyone. Have a great day. Goodbye.